Hello, I'm Lelda Smits for the Finance News Network, and joining me from Lizard Investors are its Chief Investment Officer Leah Zell and Co-Portfolio Manager John Moog. Pengana Capital is offering investors the opportunity to invest in global small to mid-cap companies through the newly launched Pengana Global Small Companies Fund, managed by Lizard Investors in Chicago. Leah, John, welcome to Australia.
Thank you very much.
Thank you.
Firstly, Leah, could you start by briefly introducing yourself and detailing your experience?
My name is Leah Zell. I was one of the pioneers of international small cap investing in the United States, and I've been investing in smaller companies globally for 30 years.
Okay, and John?
Hi, my name is John Moog. I've been working with Leah for the last 8 years, and I've got about 15 years of investment experience in equities.
Okay, and what are the most important things that you've learnt about small to mid-cap investing over your career?
You want to be able to find good investments while they're still below the institutional radar screen, that there's a huge opportunity if you have the capacity to do your own work, and that understanding the business model as well as the financials is key.
Okay, so John, how many people are in your investment team?
Sure, our investment team is made up of 5 people. The senior investment people are Leah, myself, and David Lee. The 3 of us comprise the investment decision makers in the firm.
And John, how do you arrive at consensus when identifying candidates for the portfolio?
Well, generally, consensus can be tough to reach, but as long as 2 of the 3 of us agree, we tend to make the investment, so long as it meets all of our investment criteria.
So John, how do you define global small to mid-cap stocks?
You know, for us, our sweet spot's about 500 million US market cap to about 2 billion.
Okay, John, and Leah, why do you believe they provide a compelling investment case?
I think that both on the allocation side and on the manager side, capital is concentrated today, and the majority of money is going to funds that are in excess of $10 billion. That means that the small cap universe is undercovered, underfollowed, underowned, and that gives us a huge structural opportunity that we believe is going to last for several years.
So Leah, why are you able to capitalize on these opportunities?
Because we are organized to invest in small cap equities. I've been doing this for 30 years. We are all generalists, we are opportunistic, we are value oriented. People know that this is our expertise. They bring ideas to us, and since we have been operating in this universe exclusively, it means that we are focused to capitalize and to make the most of the great investments when they show up.
Okay, and Leah, what key factors must a stock exhibit for you to consider buying it?
We have 5 criteria that we look at. We look for essentially and basically, most importantly, very good businesses that have competitive advantages, that have moats, and once we find these businesses, they need to have good balance sheets. Management needs to allocate capital and be aligned with us. They need to have good corporate governance, and finally, they need to be at valuations where we can model a 20% compound return.
Right, and John, how do you and your team identify opportunities from around the world?
You know, that's something we spend a lot of time working on. I think over the last 7 years, we've been able to identify and create a mechanism for sourcing ideas that are underfollowed, unloved, out of favor for a variety of reasons, and we spend a lot of time looking for opportunities that are really below the institutional radar screen.
Right, so John, knowing when to sell is as important as knowing when to buy. What key criteria do you apply when deciding to sell?
Sure. The 2 criteria we use are, the first and most simple is we sell a stock when it appreciates to what we consider fair value and the thesis is played out as we had hoped. The second, and slightly different, is when the thesis is not playing out and the fundamentals of the company differ from what we expected. Oftentimes we'll sell then because it no longer meets what we originally invested in.
And finally, John, how do you construct a portfolio designed to achieve your objectives?
Sure, we construct the portfolio purely through bottoms-up investing. So we invest in individual companies and put together a diverse set of individual companies we're investing in. And then we manage risk top down. So we look at things like geographic mix, currency exposure, and industry exposure to make sure we're not overexposed to any one of those factors in the portfolio.
Thank you, John. And finally, Leah, given small to mid-cap stocks are known to be volatile, how do you manage this?
Well, the first thing you have to do is limit the capital that you manage. You really need, and you need to concentrate on a limited number of names so that you can know them very, very well. The second thing you need to do is you need to have conservative criteria so that you're not speculating on very, very risky names. Ultimately, risk control is at the level of the individual security that you buy. And finally, you need to look at your portfolio and check for cross correlations so that there aren't concentrations of risk that you didn't anticipate, either sector, geographic, or currency.
Leah, John, thank you for explaining the case for global small companies investing, and good luck with the fund.
And thank you very much for your time.
Yeah, thank you so much for your time.